This is Brad Matheny. Today is the 21st of April, Monday. I hope everyone had a great holiday weekend. Happy Easter, stayed safe, happy Passover. And today we're looking at a pretty interesting market move. So, as if you followed my video, I posted a video ending with this chart on yesterday evening, the 20th, end of Sunday evening. And after going over my research, I really don't see any impetus, any driver of upward trending here. In the SPY and the QQQ and the general markets, I'm not seeing anything really driving the market forward. In fact, if I come over here and here and here and come to pretty much any of these, open with photos, you'll see that the data itself presents a rotating downward trend here, retesting the 480, possibly 500 lows. We are looking at general weakness in the commodity devaluation cycle phase chart. We're looking at moderately strong demand a couple weeks ago for U.S. dollar-based assets. That has now waned. It's likely going to move back down here into this lower channel. We've got this breakdown in the market ratio index. We were up here on that end of that last week where we had that strong buying. Now we're weakening back down into this lower trend. I really see us staying down near this lower area, this kind of this channel right here. You can see here that we've got a fairly big breakdown in the valuation cycle phase index, meaning that stocks are devaluing excessively. This is a pretty solid breakdown in the markets. We're getting no real, I mean, you can call this a triple bottom if you want. Maybe it's going to show up in a week or two or three. But, right now, I don't see any real strength in the markets. Innovation index is breaking downward. Accumulation cycle phase index is moving in bearish trending territory monthly. Could get a pretty good breakdown carrying out much longer than people expect. US leading index had a big breakdown and then that big rally, that volatility. I think we move back into sideways breakdown trending over here. Fear index is breaking downward a bit. I'm showing you all these things. This is normally subscriber only stuff, but I just want you to see cash flow index weakening, stalling, seeing no follow through. And again, what's going to be the driver? Ask yourself, what's going to be the driver of a big rally? Anything? Anybody? I don't see it either. Volatility index is down near the bearish trending area and continues to stay into this weaker trend. If we move back lower again this week, which I believe is highly likely, and next week, we could move into deeper lows back down here in the 567 area. Um, Volatility index weakening. Now, remember, we had been down in these lows before. This is technically kind of uh, I don't want to call it overbought, but this is really kind of overbought. Staying in this middle area here would be moderate upward growth. We start getting up into this 70, 80, 90. That's more overbought type territory. So, given where we're at here, I think we're looking at kind of a downward trend. And of course, US stock market index, this is kind of what I believe is going to happen over the next couple of weeks. This is a weekly chart. So coming back over here to this data and looking at the cycle phase, we're looking at an inside breakaway in a trending mode. We are in bearish, explosive trending mode. We're in a downward cycle phase. You know, I think we're going to stay pretty much in this area. I think the markets are going to struggle to try to find support between, say, 490, roughly in this area, out into this maybe 535, 540 area. So I think we stay pretty much in this area. And I think the markets struggle to try to get out of this zone over the next couple of weeks. I think we're really looking at this low here in May. I think we're looking at moderate breakdown into this low here in mid-May, May 8th, 9th, 10th, 11th. And then we're going to roll back up here, retest this resistance. Again, this is the upper resistance consolidation area that is going to break back down. So I see no reason. Now, again, I will add the caveat. If we get some great news that China and the US have reestablished trade and everything's going back to normal, or that the world is somehow taking a happy pill, and all of a sudden we're all back to where we were 6, 7, 8 months ago, or more, and the Fed's lowering interest rates to 1.5% or something like that. Okay, yeah, we're probably going to get a bounce, and that's really if we start to get some kind of unusual positive move. But until then, as I highlighted in the video yesterday and Sunday, I mean, I see the markets really just consolidating and rolling potentially downward into this July low. So I don't really see anything that's super positive right now. So now this is an unnamed template here in TradingView, and I'm doing this to try to show you guys again without all my charts. I keep drawing the same things, but it's helpful for you guys to learn. So here we have the big excess phase peak pattern, the flagging, the breakdown into what I thought was initial consolidation with the tariff breakdown moving into this channel. So we do have an upper range right over here. And we do have that same upper range setting up down off these lows or those highs. And then we have the lower range setting up over here. We also have the low of the flag right here. And we have the upper range of the flag pretty much. Let's level it right there. Okay, so with the QQQ, we're looking at the same type of scenario. Okay, we're looking at kind of a moderate meltdown into that May 6th, 8th, 10th area, rolling back up, potentially reaching into some highs before we break back down into the July low. And I drew that wrong. It's a bit more aggressive. And then we roll into sideways trading, and then we break down into that September, October low. So again, same type of setup. And again, sometimes it feels like I am just repeating myself, which is fine. Because if nothing changes, nothing changes, right? So here's kind of our sell zone. Here's our sell zone. And here's our sell zone. So you can see here, sell, buy, sell, buy, sell, buy. And in between these zones, I want you to realize that you are going to have these broader trends, moving upward, potentially moving downward, and moving downward, that this will eventually set up a bottom and potentially rally. So you can see very clearly my expectations. And, this maps out 6, 7, 8 months worth of data, that you can pretty much, print this chart, pause the video, put it up on a wall. And if my analysis is correct, you can come back to me in about 6, 7, 8 months and go, wow, you nailed it, which people have done. But again, things could change along the way. We could get news. We could invalidate. Let me explain to you what invalidate would look like. An invalidation of this pattern, this consolidation pattern, would be a rally that, that takes off like this and rallies up out of it. We have to get above that upper channel right here. That is invalidation right here. That is invalidation. That would mean that we go back into a long trade and that we are accelerating to the upside. Anywhere over in here. So anywhere, rallying up to this area, stalling, rallying up here, stalling, consolidating, rallying up here, stalling. Any of that can still present a downward cycle trend moving down into the ultimate low cycle. We have to get above this upper level right here in order to try to really invalidate this pattern. So, and again, we will set up a tighter range out over here, maybe on the way up over here. We'll set something up like this where we rally up, come back down, and then move into a pattern like this. Or even better would be to rally up, set up a flag, and then rally up into consolidation and then break away to the upside. And that would be ideal because that would be an inverted excess phase peak pattern, just like this. Here's our peak as A. There's our B flag. There's our C breakdown into consolidation. There's our D consolidation. And there's our E potential ultimate low. And then we have the same thing here. We would have an A base, a B flagging, a C breakaway, a D consolidation, and an E moving up into the ultimate high. So you can see that these are, this is A. You can see that, the patterns themselves, they are structurally what makes the market move. So I'm trying to teach you guys essentially price structure, Fibonacci price theory, Elliott wave in some structure. Elliott wave is hindsight. You can use it to guess at where things may happen, just like I'm using this to guess at what might happen to the upside. But again, I'm teaching you price structure, not using indicators, teaching you what to look for, understanding where the cycle phases are setting up, understanding how this deep low will give us a good opportunity through these cycles, and really trying to teach you how to look at any chart. I mean, I can pick any chart and do this, So Disney, give you an example. Everybody follows Disney, right? So what do you see? First thing I want you to look at or look for is consolidation. So in the middle of a trend, look for consolidation. I see consolidation right through here. I see some consolidation right through here. And I see some consolidation right through here. I see consolidation again right through here. You see that, guys? Okay, so now we come over here. We set this up and we look for a low with a flag. Hey, low with a flag. These are inverted excess phase peak patterns. Look at there, low with a flag. Oh, look, another one, a low with the flag. Oh, look, potentially a low with a flag. Let me draw that again. Maybe, don't know yet. Then the flag moves up into consolidation. You can actually draw it kind of sideways here across this channel and out into that ultimate high. Wow, pretty perfect, huh? It did exactly. It A, B, C, D, E'd all the way through. Again, A is the low, B is the flag, C is the breakaway into consolidation, D is consolidation, and E is the breakaway to the new high or the ultimate high. And again, we get the same structure here. Do it in blue. Gee, look, we come up, we flag, phase out, break down into consolidation, break down into our ultimate low. Oh, look, another excess phase peak pattern. Oh, look, there's another one here. We rally up, we flag out over here, we break down into consolidation, and we break down to the ultimate low. Potentially could go lower. We don't know where we're at yet. Okay. And again, Okay, someone agreed with me. Lovely. And here's the inverted pattern. There's the inverted excess phase peak rolling up into consolidation, rolling up to the ultimate high. You see how these things work? I mean, at this point, if I haven't convinced you that these are structurally the patterns that make up the market and that they happen everywhere on any time frame, on any chart, I don't know what else I can show you. Excess phase peak patterns happen anywhere. They are the core construct of price action. You learn anything from me, I hope you learn these excess phase peak patterns because you can pretty much tell what's coming next. Okay, we're either in a big, broad consolidation here. Look, peak coming down, flagging. Wow, could this really work like this, Brad? You betcha. Here's our low. Here's our breakdown. Looking for consolidation, maybe down in this area. Oops, before attempting to move into a ultimate low breakdown. Maybe we could invalidate from this area all the way back up. We would have to get above this high. So again, core constructs right here, guys. I mean, you can look at any chart and pick it apart in 10 minutes looking for these types of patterns. Okay, so gold and silver, ripping. Okay, gold is up to 34.15. Gold has a come back over here, come back over here. We're looking at a momentum rally and counter trend mode. The momentum rally and counter trend mode, I'm going to tell you guys, gold has made a huge move. Okay. And I mean, we're talking gold is up, come back over here. It's up 86 bucks, 2.6%. And I really do believe, trying to not run out of time, that we could see some type of a pullback. This is a good move here, but this is really quite extensive to the upside. We might get up into this 30.40 or 34.40 area, but we could be looking at some sort of a pullback in this move. Okay. And I'm going to warn you again that, it's common. We get these pullbacks. You can see here rally, pullback, rally, pullback. So from this area here, key Fibonacci levels would suggest that this 3380 area to 3440 area would be a strong pullback contender. Silver, on the other hand, is really, it's been lagging. You can see gold has rallied up, from 3320 to 3400. That's an $80 move, while silver's moved sideways. Silver keeps dancing around this 33 level. I've drawn it here. Really, this is supposed to be 33, pretty darn close to 33. There we go. And I think that if we get above 33 here on silver, and gold holds up here, I think silver this week could really make a big move. I think silver could really rally straight on up. Okay, and we will come back over here to Bitcoin. This will be a blank chart. So we'll take a look at where we're at. Again, we are moving into that excess phase peak pattern. We are in consolidation. I'll draw it for you again. Rally up, coming down, flagging. We have the flag low, technically right across here. We have the flag high coming across up here. Now we have the breakdown into consolidation. Consolidation low pretty much is right here. Consolidation high is pretty much right. Well, we can call it right here because of this rotation here. We have a secondary high right here. We're getting a bit of a bump here, and this is likely due to the move in gold and silver. and or safe haven activity. But ultimately, Bitcoin should be rolling into that move to the ultimate low, somewhere down here, 58,000 to 63,000. That's what it should be doing. In order to invalidate, if we were to get an invalidation, we would need to see Bitcoin rally up above this 108 area to actually qualify for invalidation. Now, either one of these outcomes is very likely. I believe the downward outcome is really going to be the dominant outcome right now. I don't see any reason why Bitcoin's going to rally in a stagnating, devaluing global economy, unless somehow it becomes a new safe haven for the world. And I'm not sure that's going to happen in the next 3 months. Okay, guys, it's Monday. Plan our trades well. If you don't know what to do, wait for the market. If you're worried about gold and you're saying, Brad, what do I do? What do I do? Just wait for it. There's plenty of time left with gold and silver to make a big move. But after this big rally, we could be looking at a pullback. Just wait for it if you don't know what to do and you're not already positioned. Okay, guys, get some today. Thanks a lot. Talk to you later.